Hello, welcome to our Lunch and Learn ESG Financial Reporting Concepts. Just a few housekeeping items before we start our webinar. Just want to go over the CPE. In order to receive CPE, you will need to stay connected to the webcast for the entire program and answer at least 3 of the polling questions. For those who qualify for CPE, you will then receive your CPE certificate via email within 2 to 4 business days. Also, if anyone has any questions or issues during today's webinar, feel free to put them in the chat. And I think we are just about ready to start. And Lynn, I'm going to pass it over to you.
Okay, great. Hello, everyone. My name is Lynn Fountain. You can see my bio right there. Actually, I have well over 40 years of experience, but today we've been doing these coffee talks, I think we'll call them, lunch and learns, whatever you want to call them, let me turn my camera on here, I'm sorry, for probably the past 5-6 months. I think we started doing them in October. We initially were doing some on accounting and financial reporting concepts due to COVID. This is kind of our first venture away from that topic. We wanted to do one on the concepts of environmental, social, and governance, since that is becoming such a big issue in today's world, corporate world. So, as an introduction, and just so you know, there are 3 polling questions that we'll have during the session. And also, I will talk for probably about 40 minutes, and then we will have another gentleman from the organization talk in regards to and show you the platform that's out there, which provides great information that'll help you navigate this issue as well as many, many others. But most of you have probably heard the newest acronym in the business community. I kind of love how we come out with these acronyms, but the new one is ESG, Environmental, Social, and Governance is what it stands for. And it primarily focuses on a couple of elements. One, actions companies can take to ensure their practices have a positive impact on society and the environment. And another one, actions companies take to manage business and financial risks related to those matters. Now, if you really think about it, if you go back to other acronyms like GRC, which is governance, risk, and compliance, or enterprise risk management, ERM, those incorporated some of these areas. ESG is just one of those newer concepts that kind of envelopes all of those. And one of the biggest issues that's coming out about it is in regards to what disclosures need to be out there for companies that have these types of issues or concerns. So what we're going to talk about in this short time we have, as I said, I will go for about 40 minutes and then we'll let you have a tour of the tool that is available, and you can see what type of information that you can get on a real-time basis about this topic as well as many others. But we'll talk about some of the concepts involved in ESG. Then we're going to talk a little bit about responsibilities of accountants, management, and the board. We'll talk about various accounting considerations. And then last, we'll talk about the impacts on financial reporting and DCP as disclosure controls and procedures. So what we want to do first, and I'll have our host launch this poll, is, and again, you need to answer all 3 polls to make sure you can qualify for your CPE. This one is, which topic would you like to be covered during next month's Lunch and Learn? Next month meaning March. I guess we're already into February. So would you like further detail on ESG requirements, the need for IT literacy in the accounting field, the rise of accounting automation, or maybe something on forensic accounting. So I will hand it back to the host just for a minute and allow them to show us kind of what the results are. We have quite a few people on the line, so we have to allow just a minute or so to make sure everybody can get their response in. So you just select your response and hit the submit button. So with that, I'm going to see, Jill, do you want to?
Yeah, we'll just give it another few seconds before we close the poll. But it looks like right now, 31% for the rise of accounting automation.
Okay.
And forensic accounting, further detail in ESG, and need for IT literacy, those are all about 23%.
Okay, so we're fairly even there. So we'll probably, those 4 topics there, we'll probably cover in the next several months. The forensic accounting one is kind of an interesting one just because of the concepts of fraud and everything that's going on out in the environment today. But we'll kind of cover those as we move through. So I'm going to move on and start talking about really what the concept of ESG is. So you're probably familiar with this, but it's taken on a whole new meaning, a whole new life, I guess I should say, with this concerns that have been brought to the SEC in regards to should we be having companies and having companies disclose more about what they're doing. Now, the E stands for, of course, environmental. That relates to climate change. That's definitely a true risk in today's business. I don't know, wherever you're located. I'm here in the Midwest. And it's crazy because on Sunday it was in 55, and yesterday we had basically a very severe snowstorm. So climate change is a real thing, and it's happening, and it's one of the most significant concerns of ESG. Investors right now want enhanced information about how companies really are approaching in what they call environmental sustainability. Now, a lot of companies that deal with environmental issues, and that could be manufacturing companies, it could be utilities, it could be hospital settings, they often refer to it as sustainability and sustainability accounting. And what you see is a lot of the reporting that currently happens around that is done separately. It's not done within our financial statements or our 10Ks or our 10Qs. So that's part of the drive here is since investors are wanting more information about it, they want to know what organizations are doing in regards to sustainability. And so that's part of the reasons why it's becoming a enhanced concern over disclosure controls. So the foundation of sustainability reporting is for the organization really to identify and prioritize its impact on the economy, the environment, and people, and to be transparent about their impacts. And if you think about it, regardless of what type of organization you work for, you may have significant impacts on one of those 3 items there. And so having that and disclosing certain information around that is critical. So environmental issues in today's world are far and wide. I mean, we used to think of it as maybe simply oil spills or major events like that. But they now kind of classify them into 4 main areas that can impact the activities of the business. So climate change, pollution, sustainability, which then incorporates all your environmental concerns, and waste reduction. So those are the things that at least make up the E of environmental. Then you have social, and this is where we've come onto the horizon of new concepts with social media and our availability of the internet and everything that is happening here. So Regulators, investors are wanting companies to focus on their social impact. So some of the questions that are being posed is how a company is managing relationships with its workforce, especially now during COVID, and all of the changes that are happening within organizations, whether you're working remotely, hybrid working, meaning some in the office, some remotely. Also, relationships with the community in which you operate and the political environment. So those are some questions that are being posed around the S of social. What social factors can affect a company's financial performance? All right. You may have seen here just recently, yesterday, a major CEO has stepped down because of concerns about maybe a relationship they had with a coworker. Those are social concerns, how those things impact investors, how they impact how people view the company. Those are both short-term and long-term challenges. So social factors to consider include a company's strengths and weaknesses in dealing with social trends, and social trends are ever evolving. Everything from, what we're talking about in politics to how people are being treated, to everything around maybe sexual harassment or employment, discrimination, those types of things, as well as labor and politics. So social factors don't just depend on how consumers are going to judge a company's behavior. There are other events. Those include things like geopolitical events that maybe prevent companies from producing or distributing their products, labor issues. And right now, we know that partially because of the pandemic, there are systemic labor issues that are out there that all companies are facing. Risks that come with the safety implications of a product or the politics of a company's supply chain. And also in today's world, the supply chain right now is having significant difficulty, and having companies basically outline how they're managing and handling that so that they can service their customers is important to investors. Also, complex social dynamics, from maybe surges in online public opinion to strikes and company boycotts by different groups. Those are all part of the S in social, in ESG. Then we have governance, and most of us are used to governance. We think about that in the way of how does our board or our senior management manage the company, govern the company. Governance in today's world, all stakeholders expect companies to ethically manage their business. And stakeholders are interested in how the company really actually addresses governance processes. And that includes how they manage their business ethics, how they're handling their risk management protocols and processes, and how they're dealing with legal compliance of issues. If you think just simply in the past 2 years and what we've gone through with the pandemic, some of the mandates that have been brought down by whether you are in a specific state or the federal government, people are wondering, how the company is addressing that. Are they being prepared to comply with certain mandates? And then when the mandates get taken down, what are they doing? So those are all components of the governance process. Also, factors in decision making. So that extends from sovereigns policy making, country policy making, to the distribution of rights and responsibilities among different participants in your organization, including who has responsibility over governance, whether it's the board of directors, managers, shareholders, stakeholders, and what each of their roles involve. So that is a little bit about the G. Also, governance is if you look at it simply, it's the rules and procedures for corporations and countries that allow investors to screen for appropriate governance practices, appropriate management of the company in line with laws, rules, and regulations. So the purpose of the corporation, the role and makeup of your board or your oversight body, and the compensation and oversight of top executives have emerged as core issues in companies' corporate governance structures. And we do currently already have required disclosure controls and procedures around some of that information. So this is just enhancing that. So we have to recognize that once we set out to do an ESG program, and you may have an ERM program already developed, you may have a GRC program already developed. Once you set out to develop your ESG program, just like those others, one size does not fit all. Organizations are going to have to take really a disciplined approach to identifying what elements are required within their programs, because every company is different and all organizations have different, they may place a higher priority strength on, say, environmental issues rather than on social issues. So this involves assessing the organization's needs at several levels. And so basically, an ESG program, you can think of it in a tiered phase, a step phase. One is determine your business specific ESG issues. So what I just went through, what are your concerns and what are your organization's responsibilities in regards to environmental, social, and governance issues. Then look at what existing programs you have out there. I mean, this doesn't mean you have to upend everything and close down your ERM program and start something new. Evaluate existing programs and look for elements that you can synergize. Then identify gaps in your current state. So you've evaluated your programs. What are gaps? Maybe you're not looking closely at environmental issues, or it's not embedded in the overall holistic enterprise risk management process. That would be a gap. You might want to find ways to minimize that gap. The next step would be set goals and frameworks for your plan, for your ESG. What are you going to call it? Is it going to be part of ERM? Is it going to be part of GRC? Is it going to be part of strategic planning? Those are all considerations. Then you develop actionable plans and KPI measurements, and you report on your progress. So let's talk a little bit before we get into disclosure controls and procedures, which is a lot of what people are concerned about with ESG. I want to talk a little bit about roles and some accounting considerations in regards to ESG. So considering the framework that we just outlined on that previous slide, you have to think, what role is the board, management, and your individual accountants going to take in ESG? Well, in relationship to accountants and management, accountants and management have a lot of analytical skills, business knowledge, and really the ability to understand and apply different reporting standards. I mean, if you're an accountant, you probably are familiar with all the different financial reporting standards that are out there. So you're positioned right now to work in several areas when addressing ESG concerns. So things that you may be able to focus on to assist your organization in obtaining the right information for those disclosure controls and procedures include things like reporting, cost analysis, and audit and assurance activities. So when we talk about each of those, think about reporting. Your financial systems and tracking systems might be able to be modified to incorporate environmental and social information. I know at one point I worked for a utility and we had a separate environmental group. And at that point, they used a whole separate reporting system outside our financial reporting system that they used when they reported environmental issues or hazardous issues, those types of things. And that system was really designed to be able to pull in all the EPA requirements and the environmental requirements, and then allow the people in the department who were mostly engineers to, line up, hey, are we meeting these? Do we have these permits? Those types of things. Well, there are so many dynamic profiles out there right now and programs that might allow you to integrate your reporting, your financial reporting, with some of those ESG type requirements. Also, cost analysis. Professionals frequently analyze investments using data from analysis of your profits to make decisions regarding social and environmental initiatives. Think about these things, your purchasing decisions at the most basic level, and the cost benefit analysis. Well, you're going to be thinking about, on your purchasing decisions, some of the environmental impacts, where is the items coming from, how did they get there, how are they transported, and social considerations. Are you including diversity type issues for your vendors, those types of things. Evaluating facility and location choices. You sometimes, as accountants or as financial people, may do scenario evaluation analysis about cost benefit of where to put your facilities. You may consider energy efficient concepts. As a organization, you may have gone through various concepts of, do we, use solar power? Do we use wind power? What do we do? Tracking emissions or natural resource usage. And sometimes that has been the role of environmental. But again, in today's world, they're talking about the concept that those types of things may have to be tracked at a more central level because, disclosure of maybe emission issues may be something that you're going to have to include in your financial reports. And then evaluating manpower needs. Yeah, that's part of governance, understanding what you need to run the organization. And investors and shareholders want to know that. They want to understand, is the organization getting the resources that they need to be able to meet the requirements to operate in today's crazy environment? And what are their plans if the resources have been severely hampered, either in today's world of the pandemic, or, we're running into a lot of labor issues right now because people are changing jobs. Some people got used to remote working and they don't want to go back into an office, and there has been a increase in a labor shortage. So those things are all important to investors, and that's why they included in part of this ESG role. So all of these can be extended to collection, analysis, and reporting of a lot of what we consider non-qualitative information or non-financial information. And then there's audit and assurance. Financial statement integrity, which is what we're really talking about when we want to talk about disclosure controls and procedures. It requires really clear processes, procedures, and internal controls. So accountants and the individuals who typically put together the disclosure controls and procedures, along with your legal folks, can provide auditing and assurance on your CSR reports, maybe your customer sustainability reports. Systems that are in place and reports can be audited by external independent groups or individuals. So that's another role that can be played. Now, the Center of Audit Quality, which is a group, did a survey recently about ESG financial reporting roles. They found 95% of S&P companies, so traded companies, had detailed ESG information. That was publicly available, but it was outside of an SEC submission. So that's a lot of what we're talking about here. The information's there, but it's provided in different formats, and it's outside the submission of the financial information to the SEC. Also, audit committees indicated 66% of their companies issue an actual ESG report that is, again, outside of an SEC submission. 69% obtain or are actively discussing obtaining third-party assurance on components of ESG or sustainability. And this was a very recent study. So this tells you people are taking this issue very high on the concern list. And then 10% of audit committees responding as having some oversight responsibility for ESG reporting, which is kind of interesting because that to me is a low percent. And I think we will see as the SEC continues to evaluate this issue and determine, okay, what do we want to require? Audit committees are going to have to take on more responsibility. So from a financial reporting perspective, it's probably important you make sure your audit committee members know that. So all of these findings point to the need for enhanced disclosure controls and procedures on environmental, social, and governance issues. Now, there were some recommendations by the Center of Audit Quality on audit committee involvement, and these are outlined here on this slide. They said that audit committees should focus on internal disclosure control and procedures for metrics publicly disclosed in a sustainability report. So you want to make sure your audit committee knows what those metrics are and how they get into the report, because once they get into the financial reporting process and the disclosure process, they're going to have other implications in regards to possibly Sarbanes-Oxley issues and other things like that. They also said audit committees need to work closely with other committees. You might have an environmental committee. You might have a governance committee on your board to really understand how ESG risks are identified and prioritized and how the company defines materiality. They also suggested that audit committees understand the connection between ESG strategy and related goals and metrics. Companies right now are, because of the prevalence of ESG being thrown out there, they're starting to say, okay, we need to develop a true ESG strategy. So they want to understand from an audit committee perspective how management considers any impacts that ESG and the strategy may have on the financial statements. If you're going to develop an ESG program, there's going to be costs, there's going to be resources that are impacted, and that is going to impact financial statements. So those are all things that audit committees should understand. Also, they recommended that audit committees coordinate the risk oversight connections between multiple committee members. So they're not saying right here that it should be the audit committee. They're saying coordination between multiple committees. And as I mentioned, you know, your committees you probably have a disclosure control committee. You probably have a governance committee. You may have a committee you have an audit committee. You may even have a compensation committee. You know, so compensation could relate to social concerns. People, you know, they want to know what our executives are making and how they're being compensated. The last thing here is to monitor assurance-related activities and oversee third parties that are providing that assurance. So if you hire external third parties, it's important to make sure that the organization understands what that group is doing, how they are pulling together the information, how effective they are, what your contracts involved with that organization, and basically making sure that they have the appropriate qualities and capabilities to execute what is needed on an ongoing basis. So before I turn it over, let's talk specifically a little bit about financial reporting and disclosure controls and procedures. Companies are increasingly disclosing non-financial information. Whoa. My screen went away, guys, sorry. Companies are increasingly disclosing non-financial information and key performance indicators around those issues of environmental, social, and governance matters. Okay, so this includes corporate environmental footprint, Okay, so what is a footprint? Well, it's how your organization establishes its foundation. And, if let's say you're a utility, you have a carbon footprint, meaning you have environmental concerns out there. So organizations are wanting to understand, what is your corporate environmental footprint, how the company actually treats employees. And a lot of that's coming, again, from what's happened in the economy in the past years, the COVID pandemic, how employees are being treated, how you handle diversity, how you handle hiring practices, how you handle issues like what's happened with the pandemic, and how you manage your employee base. And then how leaders operate, and that gets to your really governance process, the ethics concerns, how you manage employee compensation, and how that relates to leadership compensation. So these non-financial performance disclosures actually provide insight into how management is navigating all the global trends and risks and opportunities out there. So information that is beginning to appear in financial reports like our 10Ks might help stakeholders assess a company's long-term resilience and financial reporting. Now, there's a group called the Sustainability Accounting Standards Board. They serve as the foundation for reporting non-financial information investors want in addition to financial information when they're making investment decisions. So companies really are going to need to consider if non-financial information that they report in separate type reports outside their normal 10K or financial reporting meets investors' needs. In June of 2020, the Investor Advisory Committee of the SEC recommended the SEC promulgate specific disclosure procedures regarding ESG topics. So that's when, a lot of the issues really came to surface. Under current SEC regulations, disclosure of ESG issues is only required if they're considered material. And there's a material definition in the link that I have at the bottom for you. Now, move forward about 10 months, I guess that would be. In March of 2021, the SEC announced the creation of an actual climate and ESG task force in their division of enforcement. So if you ever go to the SEC website, across the top, you can navigate through all their various committees or divisions, I guess I'll call them. Well, they now have a climate and ESG task force division in their division of enforcement. So it's interesting to go and navigate to the SEC's site and look at what their missions and goals are. The task force actually requested comments from the public in regards to what they expect for ESG. Those public comments are available at this link. And I went out and looked at them, and the public comments, really the comment period ended back sometimes more towards the end. I think it was September of 2021, but I did see comments still being posted as late as December of 2021 and January of 2022. So the SEC actually expects to see investment advisors and advisors to private funds providing some accurate disclosures of their ESG investing strategies. And they also expect policies and procedures and practices to be implemented that are consistent with ESG related disclosures. So for advisors who actually engage in ESG investing, division staff, the SEC division, is going to focus on three things that they outlined. Portfolio management, so whether the advisor's practices related to ESG are consistent with their written policies, procedures, and disclosures regarding ESG investment. Proxy voting, whether the advisor's public ESG related proxy voting claims are consistent with internal ESG disclosures and marketing materials. Regulatory filings and marketing materials, and whether the advisor's materials are consistent with their actual practices and the performance results are appropriately updated. And then compliance program, whether the advisor's written policies sufficiently actually address the advisor's ESG investing analysis, decision-making processes, and their compliance oversight. So as more ESG issues come through the financial disclosure process, companies are going to be expected to provide more specifics that surround exact concepts that we went through in regards to environmental, social, or governance issues that their company is dealing with. And as a result, you need to be prepared now and examine whether your financial disclosures that you have now adequately acknowledge any systematic risks. Materiality, they say, is considered dynamic and it's ever changing. And we know that by what's happened in the economy over the past couple of years. So as we navigate through the current economic crisis, organizations are going to have to continue to focus on the future and how ESG risks might impact their own individual operations. Okay, with that, I have the next polling question that we'll put up. And we will, then I'll turn it back to Jill and let her take it from there. But this polling question, has your organization considered some of the elements we've discussed related to ESG disclosures? So the answer is, well, non-applicable, yes or no. All right, so I'll let you go ahead and take that. And then Jill, I'll let you take over, and then you'll pass it on to, I think it's Matt, that's going to give us a presentation on the available resources that the organization has.
Yeah, we'll give that polling question just a few more minutes.
Okay, Jill,
I'm sorry, just about another 30 seconds or so.
Okay, Jill, your sound is very hollow again.
Is that any better?
Yes.
Okay, it looks like about 54% said yes.
Okay, that's great. So
And
people are preparing. Did anybody have NA?
there were, yes, 22%.
Okay, that's interesting. So a lot of people on the line are just trying to understand really what ESG is all about. All right, well, I will, I think.
Do you have another slide?
Over
I
to
think or do you have another slide? Because I think there was
Oh, yeah, this is just a summary. You know, ESG's issues are really becoming front and center in disclosure issues. And so for the 22% of you that said NA, you know, I think it's important that you really dissect each component of ESG. Make sure you understand, does your organization have any responsibilities in those areas? Most likely they have something. And then how does that translate into what you're going to need to put potentially if the SEC comes out and has some specific requirements in regards to disclosures. So you should proactively monitor the horizon and begin to strategically evaluate your current sustainability reports that you may have out there and determine how it may need to be adapted to any formal requirements set by the SEC. All right, so I guess this is the third polling question, and then we will hand it to Matt. Do you currently subscribe to an accounting research service? Yes, I have CCH Accounting Research Manager. Yes, I subscribe to another research service, or no, I do not have an accounting research subscription. So I will let Jill handle this, and then I think we're ready for Matt.
Yeah, we'll give it about a minute or so to let everyone get their responses submitted, and then we will turn it over to Matt. So about another 30 seconds for the polling question.
Okay, so for everybody on the line, you just want to make sure you hit a answer and hit submit so that you can get your CPE. Okay. Where are we, Jill, with that? What was the response there?
56% yes, they have a CCH accounting research manager subscription, and 14% said yes, they subscribe to another research service, and 30% currently do not have an accounting research subscription.
Okay, so that's good information, and I think you'll find Matt's presentation very helpful. Whether you have a subscription right now, it'll provide you assistance in understanding how to research some of these issues. If you don't have a specific research subscription, it may be of interest to you to reach out and understand more about what CCH has available. So with that, I will turn it over.
Matt, I think you were on mute for a second. Sorry about that.
That's okay. Good afternoon, everyone. My name is Matt Sigmiller. I'm the Sales and Business Development Manager for CCH Accounting Research Manager. Accounting Research Manager is really our premier flag, really our flagship product for the accounting and auditing sector. And I'm going to just take a few minutes time this afternoon to take you through the program and show you some of the content that Lynn highlighted earlier in her presentation with ESG. So I'll go ahead and share my screen here. And hopefully everyone can see it.
Matt, actually, you just turned your screen share off. You could turn it back on. That'd be great.
Oh, okay. No problem. Sorry about that. Okay. Can you guys see my screen now?
Yes.
Okay. So I'm logged into the CCH Accounting Research Manager platform. So the area I'm going to take you here from the homepage is the interpretations and examples. We do an excellent job, our ARM editorial staff does, with giving real world examples, interpretations of not only SEC disclosure information, but also, you know, any upcoming trends or areas with regards to accounting and auditing topics. So I'll go ahead, I'll just click in here, and you're going to see kind of a laundry list here of different topic areas of discussions. So I'm going to scroll down the screen to the bottom here, down to number 35. This is our ESG section. And I'm just going to menu walk right through it. Now, we have several different, what we call a closer look. That's actually the analysis for any really emerging or trending hot topic areas within accounting and auditing. Once again, our CCH ARM editorial staff does a great job staying on top of these areas. You know, anytime there's different changes in reporting requirements, SEC activities, FASB, you name it, pretty much we've got everything covered in here. We actually just did come out with today with a closer look that covers ESG. Not so much within the financial statements part, that came out back in Q4 of last year. But I will take us home and I'll show you that area here in a moment. That's actually under the current developments section. And once again, this came out just this morning. And this has to do with ESG and SEC disclosure information. I went ahead and already expanded it out for everybody. But like I said, this issue came out this morning based on this particular area. We've got a ton of information, obviously, that's come out just in the past, I don't know, 12 to 24 months from the SEC on guidance and really, some of their understanding of what ESG means and how it impacts the financial statements and the 10K annual report in general. Things like the MD&A, management discussion analysis sections, things of that nature. So I'll just go ahead and I'll scroll through the body of this. There's 9 pages in this particular one. But once again, you can see things that Lynn mentioned earlier in the presentation, right? Like climate risk, those types of environmental issues, what it means to investors and what shareholders are looking for. Whether it's material impact, having to do with SEC disclosure requirements, those types of things. Everything is listed in here. We'll go down to the actual social part, which covers, once again, human capital management, pay ratio disclosures, those types of things on the social aspect of it, human capital, so on and so forth. And then lastly, the last piece of it being the governance component, cybersecurity, those other types of areas. You'll see within here too, the body of this, in these blue sections, we actually have observations. I'll kind of scroll back up here. This one based on human capital disclosures. Morgan Stanley made comments on here. Dow Chemical or Dow Corning, those companies having to do with environmental issues and how really they applaud the SEC for their recent coverage and analysis on environmental impact and really what it means to companies and specific financial statement disclosure information. So we do, once again, a great job kind of highlighting, these overall areas, what the potential impact may be, and then also giving our observations of, SEC rules and other areas that we feel really are important for you to take a look at moving forward. So this really is a big component of the ESG portion of Accounting Research Manager. I'll go ahead and I'll close this out. I'll take us back. You'll see within here, I wanted to mention too, Accounting Research Manager being our flagship product for A&A content. You'll see we've got an area here that has daily news, weekly news. We also do a closer look, which is what I just showed you a moment ago, and then our what's new checklist. So any type of FASB checklists, GASB, those types of things, everything's covered in these checklists. And then obviously effective date checklists. So whether it's a particular accounting standard or topic, like topic 842 with leases, whatever it may be, there's specific dates here, pre and post SAS dates that would be in here in a organized spreadsheet that practitioners can use and financial reporting folks can use to stay on top of those dates. And once again, it's a collection of all those different dates and deadlines that are in there in an organized spreadsheet that hyperlinks directly back either to our interpretations and analysis or the actual authoritative content from those regulatory bodies. So I'll just go back again to the home page. And once again, along with being able to menu walk through here, you'll also see we've got accounting topics that are arranged A to Z. So once again, if there's other areas that kind of cross over into the environmental social governance aspect, but have other material impact elsewhere, you can also find those in the A to Z section here at the top. And if you guys do have any other questions or concerns, obviously you can post them in the chat. Jill can read those off, but also feel free. We have a slide here at the end of our presentation that has my email address on it. So definitely feel free to reach out. If you'd like to see a demo or presentation of our CCH Accounting Research Manager, what we call ARM for short, I'd be more than happy to set a time up to walk you through it, or have a sales representative reach out to you as well. And Jill, I'll kind of reach it back to you, and I think you've got the last polling question here for the CPE credit.
Yes, our final polling question, we'll launch that right now, is should be up on the screen. And our final polling question is, would you like a more in-depth demo of the tools and content available on CCH Accounting Research Manager? And we will leave that up for about a minute. And just while everyone's answering the final polling question, which will wrap up our today's webinar, I just wanted to make just a few notes that upon exiting the webinar, there will be a course evaluation containing just a couple short questions. So if you could please answer that upon exiting, we would really appreciate it. And for anyone that qualified for CPE, again, you will receive your CPE, an email containing your CPE certificate in 2 to 4 business days. So we will leave this poll open maybe for another 30 seconds or so. Just a couple seconds longer before we close it out. All right, I want to thank you for attending our Lunch and Learn ESG Financial Reporting Concepts, and that concludes today's webcast. Thank you.